General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.
Hi there, welcome to this week's edition of Bulls versus Bears. Just the old blokes here this week.
That's right, right. So Kai is actually at an action park, is he? A Jamboree?
Oh, he's in Jamboree.
No, he's not in Jamboree.
No, he's at a...
I thought he was jumping off the cliff.
He's nerding out with some programmers with one of our soon-to-be partners in the estate planning platform, Our Wealth, which is very good. Check it out.
Either way, nice day for it, Kai. Down Wollongong.
Or down Wollongong Way. And look, the millennials yet again, probably just another registered day off after a 4-day weekend. So media this week.
Media this week. So I will... If I may, I will rant about what I actually talked about on the trade this week. So I had it on Wednesday. And what's happened is basically we have a program called ETF Elite. That's designed to beat the index. And the whole thing is that if your benchmark is the XJO, you just need something that beats that. So we just thought if we throw a few US-centric names within the ETF world, we'll easily beat that benchmark. And so we started that whole thing in December, and as planned, we built up a lead, within a 2% lead within 3 months. But the thing is, as soon as all this volatility happened, we gave back the lead, and my spidey senses said, "Okay, well, we got to figure out what's actually happened." And so one of the things that I talked about on the trade is I brought up a ratio chart. XJO versus the SPX, which is the S&P Cash Index. And what you can see there is I actually zoomed it out so I started in the markets back in 2001. So I zoomed it out. And what actually happened was from 2001 to 2008, the XJO or the Australian market outperformed the US. As soon as the GFC hit, that all changed. And what happened? QE.
Yeah.
And what we've seen is that basically that whole... from QE, US exceptionalism, USA number one, with Trump coming in with the tariffs, that all started to change. So we think structurally that could be a big signal. Now, the thing is, XJO has outperformed the S&P at times during that bounce lock. And we're talking 20, 30% bounces within the ratio. So we could see, I'm not saying that USA, being number one has ended, but it's a very crowded trade. So 75% of the world's market cap is in America. They've had the carry trade as well. So they've invested, the rest of the world has invested in the US, and the US dollar has actually gone up as well.
Mm-hmm.
And so one of the hits that we've seen is that, we've had a pullback, and people have realized, hang on, I've actually got a lot of currency exposure as well, because their balances in their native currencies have actually just dropped, while the S&P's dropped 10, but they've looked at their balances like, I've actually lost 20% because I've had the actual added bonus of the carry trade. So what we're saying is that the ETF Elite, we're still maintaining the lead, but what we're looking at now is that do we want to have more US exposure or less US exposure? And
I think
we'll figure that out.
A lot of them have diversified to. I mean, we're obviously picking the defence ETF with more European exposure and things like that. So, because we were at record dollars, foreign investment in the US stock market.
Yeah.
And Trump's just given them an excuse to rethink that, which is just the dumbest play in history.
Exactly. So that's all we're saying is that we're not saying USA won't be number one. It's just that it's a very crowded, it's a very long trade, and a lot of Australians have a lot of money in the US.
We might not be as a house, but I flatly am. Yeah. I think the US is in for a horrible ride, and they've and I don't think it would have mattered whether Kamala had got in or he'd got in. That debt problem, everyone, it's just this elephant in the room that they keep going, tariffs. It's like guys, just address your debt problem, and then everyone's okay. And stop walking around like a punk teenager with their parents' credit card. Like they got $7 trillion to refinance. I think Trump's just made them difficult to deal with now.
Yeah,
and I think he's made the problem worse. Don't get me wrong. I think the Democrats would have probably just made the debt worse.
Yeah.
Truth be told, so I in no situation do I not think that it wouldn't have got worse.
Mhm.
But he's just obviously done it very fast. And
I think the best way or someone else has expressed it is that the plan was okay, the execution quite poor. Because
well,
he's come in with I'll come in with the Trump plan. Like he just goes for shock and awe.
Yeah.
And the thing
is, the art of the deal.
Yeah. So he's gone for the shock and awe, but the thing is, the other side hasn't reacted. So without the reaction, the whole shock and awe doesn't actually work.
Yeah, when you do shock and awe and someone goes, "Yeah, right."
Yeah.
It's usually like when you ask for a discount and they go, "Sold." Usually you go, "Should have asked for more." Yeah. So really, that's the title of the episode this week. I mean, will Trump change his plan as planned? But I mean, we were toying with the plan is there is no plan. So I think that's one of my favourite images, actually.
I love it.
That our wonderful AI Leonardo developed for us this week. So
and you were also on media as well, like you're on the call today.
Yeah, no, I had what did I have? The COB Wednesday and SBS as well, actually.
Mm-hmm.
Got an opportunity to actually give my opinion on Trump. Obviously, a little bit of a different persona when I'm on Sky News, wearing my MAGA hat. But no, and that was the bit that they actually played on the news, was me just hosing Trump.
Of course they would.
So, I give the people what they want,
exactly.
And I was pretty blunt. I was pretty surprised that was the bit they used, I've got to say. I can't remember what the exact quote was. But essentially what this whole week's made us realise is, well, and a lot of world leaders probably realise is, you've got to have a plan B to America now.
Yes.
So he's just opened a can of worms.
Mm-hmm.
Like, actually, he's opened 90 cans of worms apparently, because he's booked in 90 meetings in 80 days. So, I've been watching the press conferences really closely this week. His backpedal on Wednesday was, if he had a tail, he would have had to have put it between his legs. As he walked off, he was like, "I'm not firing Jerome Powell. Never said that. President Z and I are great friends. Thank you. No more questions." And he just scampered. This morning's was a little bit of ego repair, where he's like, "Oh, we're gonna." He actually answered his own question. He goes, "Oh, how many meetings we booked in? Was it 90? And no one actually said that. He was like, he's such a B-grade theatre fucking nut. But anyway, it's and Besson's kind of pulling him back as well, I think.
Mm-hmm.
So what we started buying yesterday, just on the back of the fact that when he's now going to just, like, the distraction now is going to be all the meetings.
Yeah.
So it's not going to be, so as long as he's got something for people to focus on and the focus is on him, that's going to be, that's the main point. And I reckon, as we sort of said in the previous podcast, like, essentially now it'll be all about the meetings. US earnings will be nowhere near as bad as what the analysts, because the analysts will be wearing the brown underpants to work at the moment, because they've been, they've just seen a 20% downturn in about 3 weeks. So they're going to be dour, whereas the earnings retrospectively are going to be, they don't have any of this tariff effect in them, because people thought he was bluffing. And he was, but potentially was, but apparently he's going to do the best trade deals ever.
Of course he is.
America's never going to be richer. There's just a bunch of sound bites anyway. So but there was some actual decent stock highlights this week, as opposed to just the macro.
So Newmont, actually, so what surprised me with Newmont is that they're not great reporters.
No.
They're maybe out of the last 3 reports, two were okay, and one were just,
one was a disaster.
Yeah, exactly. So it was good to know that Newmont released today. I didn't go through the finer details, but I did see the reaction there. It was actually up 4% on the day. So, yeah, you want Capricorn metals. So we actually, I think that was an alpha trade, or
It might have been a trade of the week even.
No, that was Golden Horse last week.
Anyway, either way, the Capricorn metals is one that we've had.
Yeah, and the CEO's been let go because of aggravated assault.
I think he stepped aside or whatever. But I would have thought that, for a mining company, it'd be on your resume that you can fight, right?
Exactly right. Like, it's. I just assume it's a tough world out there in the mining thing.
Yeah. If he was Richard White, they'd give him another company.
Exactly. Right. So that's the one. And so Santos as well, they have their Barossa field has been approved. So obviously great news for Santos.
Well, it will be great news. But we may, by the time this has been going on for so long, mm-hmm. we may actually not use gas anymore by the time they get it online.
Oh, no. We'll be using gas for a long time.
No, but I mean, this has been in approval since, for about 4 or 5 years, hasn't it?
Okay.
So, I just begin late 2025. I'll believe it when I see it. Mm-hmm. So, and I think Capricorn as well, they acquired 50 odd square kilometre tenement as well. Which is not that much in the scheme of things. Western Australia is a big place.
Oh, well, and they bought it for 1.5 million. That's like 2 scoops, basically.
Yeah, exactly. So, and then CBA surged to a record high, which is safe haven buying. And to be honest, I'm just sick of talking about it.
So that was so Nadine said, she said that one of the previous guests said that it's all index buying, all passive flows. And you can just see, you all went into the one bank. So NAB, ANZ, Westpac didn't bounce as much. Commonwealth Bank at record highs.
And the thing is, we don't short. And I said this today because I had NAB on the call today. Mm-hmm. And I just gave a very clear example of why, as a company policy, we will never own ANZ, NAB, or Westpac. Mm-hmm. Just gave a 10-year comparison. But with CBA, it's just I don't care where it is. It's not cheap. Mm-hmm. It's way expensive. We're not going to we constantly, because it's the biggest company, we constantly get asked about it all the time. And it's just I'm not going to short it. I'm not going to buy it for about $40. So to be honest with you, it's so far off our watch list. It's ridiculous. Mm. So we may as well, but we're just forced to constantly have to talk about it.
It's the most owned, so
by the sounds of things, it sounds like Beta Shares owns nearly all of it now. So, yeah. I mean,
it's a good example though. How you've always been a reversion to mean trader. I've been more momentum. So this is another example of basically leaders lead. So I was trying to explain it to Richard. Is that if you're a fund manager and there's a leader there, what's the safer play? Are you going to invest in the leader, or put your neck out on the line and buy one of the beaten up shares? If you get it right, and that beaten down stock does catch up, you're a genius. Okay?
Yeah.
But the thing is, if you're on the leader and it doesn't perform, you're like, hey, well, I was on the leader. They can blame the market.
Yeah.
What I'm saying is your job's safe. So the guys that are actually at funds, they're not trading their own money, So they're trading for job security and climb the corporate ladder. So.
And I've got a real problem with benchmarking generally, just because my general thing is, should you not be trying to make your clients money every year?
Yeah, absolutely.
So it shouldn't be, we did X versus the index. It's like the index is arbitrary, it's based on market cap for a start. Mm. But because the industry decided, we're going to set the standard. We're going to set the standard that we're going to benchmark, and we're going to choose our own benchmark. I mean, seriously, it is just such an arbitrary crap. It makes all of those big funds so susceptible to the downside, because a lot of them are mandated. They are not allowed to be less than 90% allocated at all times. Mm-hmm. So even if they think the market's going down, they're not allowed to get out.
Exactly. So it's just that as I was saying, it's just that they play a different game.
Yeah.
And because they're sitting on larger pools of capital, they, from a trader's perspective, it doesn't make a lot of sense. But you have to kind of just, sit in their seat.
No, I mean, it's not just a trader's perspective. As an investor, I would want consistent performance over a long period of time. I wouldn't, what the index. So if you came in with money in 2007, are you? I beat the index by 2%. I'm still down 50. That's just not. That doesn't wash for me. But anyway, I mean, I just don't. I don't really. It really is just a system that is set up to,
it's great marketing, basically.
Well, it basically says like our people are retards, so we can't. So we're just going to benchmark ourselves against this and narrow the boundaries. It's like taking your kids Tempian bowling and putting the bumpers up. So realistically, but anyway, I do have a very large problem with it. But yeah, so we can't beat them, join them. ETF selects tracking the index, give the people what they want, I suppose. But yeah, so US this week.
So this is actually, I definitely did this an hour ago. So this is week to date. And I think the main one. United Health.
Yeah, United Health, which is the biggest health company in the world, had a shocker at earnings. So yeah, it was down 25% on the night.
Oh wow.
And so every healthcare ETF in the world just got absolutely melted. So
I was wondering why IXJ got hit.
Yeah, that was it.
Uh-huh.
So I'm not entirely sure what the major reason.
I would have to have a look at that because
that's significant.
So are they health insurance or the health providers?
They're a bit of everything.
Uh-huh.
They're like NIB, CSL, and Terry White Chemists all wrapped in. Like they do end to end.
So they've got the whole supply chain.
Yeah, and one of their head of their insurance thing got assassinated by.
Oh, is that the one?
Yeah.
Okay. Yeah,
so there's some weird stuff going on down there. Like for your head of insurance to be like you walked out of a hotel in New York or something I don't remember the place.
It was New York,
and he got shot.
Yeah.
And someone walked up and it was a targeted assassination. So, tough gig, I suppose. And
they say insurance is boring.
Yeah, well, exactly. You may want to review your payout policies. NVIDIA, I think that's coming off a pretty significant rally. So it's probably done well to hold up. But
so obviously, where's Tesla?
Over there, 1.26.
So Tesla reported this week. And who's reporting next week? I know there's a lot.
Apple, and I believe I think it's on the next slide.
There you go.
Amazon and Apple, obviously a couple of the
Meta, obviously
Meta as well, and Microsoft.
Uh-huh.
So big week.
Big of earnings. So I'm with you. I think just like Tesla, the Tesla results were
they were horrible.
Exactly, but the market rallied off that. So I think we'll see something similar with the Mac 7.
They rallied 8% on their worst result in 5 years. So that's kind of another reason why. Apart from hearing Trump backpedal, that was another reason why we were pretty happy to go long, because that sort of price action means that the sellers are obviously pretty exhausted. Yeah. They got pretty badly cleaned out, let's face it. So, and then that 10% rally in the indexes in the US in a minute means that no one got much on the buy side.
That's true.
So the FOMO will feed into more FOMO over. So we do have some all of these figures. We've got Aussie CPI Wednesday, manufacturing PMI in China and the US Wednesday, Thursday, advanced GDP, which can be quite volatile as well because it's the first one. So they have it is a quarterly number, but there's advanced, revised, and then final. So advanced is the one that's the first number. So that's the one that's wild. The rest of them are just revisions of the previous.
Yeah.
So so that one can be quite wild as well. But they're going to be backward looking. Like we've got to remember, this thing only really kicked off 20 days ago.
Yeah.
So this is not going to be coming through in the numbers this week. So next week, and then all of these companies, their earnings are going to be the 3 months up to the end of March.
Yeah.
And none of the bad news is going to be in that as well. The analysts will be dour. This is where we're sort of saying, we think there'll be, it'll be relatively good news, but it's a bit of a trick basically. So Mercado Libre, that was one I did on the call recently, the US version of the call recently. I quite like that.
So that's the US version of Amazon, is it?
Yeah, South
eBay?
America.
eBay?
No. It's Amazon, but it's South America. But it actually looked really good because it's a growing market there. Some interesting ones. Cat is always a good one. They call it the economic bellwether because it's the industrial engine. It'd be an interesting week actually. I didn't realise. I mean, that's a fair chunk of it's probably 15% of the market cap of the US stock market, easy.
Yeah.
In those.
So busy week.
Yeah, busy. And Eli Lilly, wow. Berkshire Hathaway, I thought, reported. They usually report over the weekend. I don't think it might be on a Friday. They do tend to put out their results. So we'll see how much cash Warren spent. Actually, no, we won't because it's March. So he wouldn't. Yeah. So the next one will be interesting. To see his filings.
Do you think he's bought anything?
Who knows? I don't know. I don't know him well enough. Is he a resting bids kind of guy or?
No, I don't know. He's always looking for cheap companies, and I don't think anything's cheap at the moment. So,
well, not his cheap. Mm-hmm. So, yeah, I would say he, and he's a decade-long holder, so he doesn't care if he misses the first 5 or 10.
I do remember he was buying this energy company. I think that was his most recent one. I forget which energy company.
The energy companies are cheap.
Exactly.
Yeah.
So if he's going to be buying more, it'll be in that space.
Yeah. One of our faves, one of my faves, Intuitive Surgical. Revenue, 2.25 bill, up 20%. And Da Vinci procedure growth was up 17% as well. So it's robot surgeons. It's robotic surgeries. It's a human assisted. ServiceNow as well beat estimates. And adjusted EPS up 18%. So they're two that we're quite fond of here. Lockheed Martin as well. I didn't catch those, but they're on their fifth generation plus fighter jets, and I think they're very much caught up in a bunch of potential tariff stuff. So, but that's where the companies as well. Everyone gets off the hook at the moment because if they have a crap result, it's like tariff's fault. And then they probably will be forgiven for not giving guidance either. So
either way, it should be a rosy week next week. That's what.
Well, as long as Trump keeps his trap shut, I suppose. But I think what he'll be like. I met with the Italian Prime Minister. I met with the such as. Well, that's caused an issue as well because Italy's gone and met outside of the EU. So the EU's furious. You can't be going and doing trade deals.
Yeah.
So Germany and France have just woken up to the fact that the Italians were just using their low interest rates on their bond purchases. So, we obviously got another long weekend. It's been pretty thin markets this week. We'll be we'll be back to normal schedule.
5 days next week.
A whole 5. Geez, I don't know what are the young blokes going to do? I might have to get a little bed in here for them. So, but commodities, what do we got?
Commodities. So I'll start from the top. So gold was the most interesting move. So it had a move to 3,500, then immediately got smashed down to 3,300. It's bounced back a little bit, but that's a $200 move in the space of a day and a half on gold. So.
It was less than a day and a half.
Okay, well there you go.
No. I went to bed. It been 3,500 by mid-European shift, about 8 o'clock Sydney time, and I woke up at 5:30 and it was 3,350. So it basically just went through, and then that's when Besson came out and said, there could be a deal with China. Mm-hmm. China said, no one's called us. And then, Trump said he's speaking to China, and they've still said no one's called us. So
anyway, gold being the big volatile one, but on the back of that, silver, copper just keeps on heading on higher. So
I can't believe copper's come back to 490.
Yeah, well, it's back at 490, just a shade under 5. Oh, that thing got smashed to 4. just over 4 as well. Uranium was hugely disappointing at the start of the week, but it looks like it's.
I'm going to table something here. I think we only check in on uranium on a 6-monthly basis from here on in, because I'm confident that trade works, but it's just like,
Just don't look at it.
well, Paladin was up 25% for no reason this week.
It was up 30%.
Was it up 30 in the end?
It was 30%.
Yeah, right. So, like, on no fundamental news, it's just become...
No. So what happened was at the beginning of the week, I think Deep Yellow talked about lowering production. But then on the day after, Paladin came out and they actually met production guidance despite having all those heavy rains. So then the market said, oh, well, there we go. So yeah, that makes no sense, but that's it is what it is. So that's uranium. Crude oil is interesting, hovering between 62, 64. I think that is the barometer of risk on versus risk off. So keep an eye on that. And Bitcoin. So Bitcoin was hovering around the 84 and then just out of nowhere, it's actually roughly around the same time that gold got smacked. He just jumped to 93 and now it looks great on the chart and looks like it's heading back to 100. And
I think the price action in Bitcoin, that really reaffirms for me that
store of value.
It's a store, like, because 3 years ago, Bitcoin would be at 30,000.
Oh, absolutely.
And its price action's almost, it hasn't been better than gold, but you can tell it's matured, like as an asset class.
Yeah, so there's actually market makers in there that actually will buy on the way down.
Well, yeah, and that proves that where we're talking about passive buying, now that there's ETFs around it, that's where the volatility is pulled its head in.
Well, don't forget there's 3 times long ETFs. There's the MicroStrategy ETFs as well. So there's a lot going in that space.
No.
But either way, it's held up well. And for me, dollar index was interesting. So dollar index crashed below 100, and that's actually below the 2024 lows. And I was thinking, oh, man, here we go. Got all the way down.
Well, that's when gold got to 35.
Yeah, and went all the way down to 98. And if I zoomed out on a weekly, that's broken the 24, 21 lows. So it's that 100 level's been there for a while, and it looks like it's going down to 90, but it's reversed a little bit. So interesting.
The opportunity to sell, I would think.
Yeah. So
iron ore, despite the AFR saying that China's never making steel ever again, has rallied yet again, and is largely probably slightly up for the year, to be honest. So don't believe what you read. The AFR actually could almost get Kramer of the week this week, or this year, to be honest, because they started quoting the IMF for economic numbers. So it's a bit of and why JT's saying, oh God, is because it's a bit of an in-joke in financial markets that no one listens to the IMF. Like they're about, you talk about Jerome, Trump's talking about Jerome Powell being too late. I mean, these guys, I think they don't get their economic numbers for a year. So they're always hopeless, but they were really trying to double down on the panic, and it's just like dissipating. And so they're obviously, that's where their clicks work, I suppose. So Kramer of the week.
Oh, here we go. Yeah.
So this is one of the funniest things I've ever seen. They've nominated Jim Kramer for Pope. Apologies to any Catholics out there. I'm just not don't mean no offence. However, he is the grand poobah of basically this bar here, and we're talking. This is a 60-minute chart. He called gold to $4,000 after saying you wouldn't own gold for the last 3 years. 4 hours before it topped, and then has capitulated completely. So I think if there was a pope of markets, he would be the reverse market indicator pope for sure, or the cardinal.
Oh, is that a grok image?
It's a grok image, yeah. So yeah, no, that, and I just couldn't resist. The Kramer of the week, he just nailed it. And I think he said he had a chainsaw on saying semiconductors on the day that we bottomed out in the NASDAQ.
Oh, God.
And then I think he's starting to say that Nvidia's, for the first time ever, Nvidia's looking like in trouble. So you probably, yeah. Anyway, never has someone been so consistent. It's just unfortunate it's consistently wrong. But that was just an absolute.
And I think yours is the trade of the week next. Your NASDAQ.
Yeah. So Let's try and get that one up and running.
Huh?
Oh, what was that? Oh, there we go. So trade of the week, long Nasdaq. So this is kind of, for those of you listening to the podcast, we've obviously had that plan with the table and the average days, etc.
Yep.
So I've been saying since, well, when I got called ridiculous on the call by Junbei, when I said it'll be probably unchanged for the year by way of down 20%. Well, there it is down 22%. But it felt to me a little bit like 2022. And then the more I went back over the previous moves, the more this formation was very common. So this is 2022 here. So we basically were down 21% over 114 days before we bottomed.
Yep.
And it sort of double bottomed, really. And then it took 3 weeks and about 16% back to like a previous sort of medium term high, and before it went on the next run down. 2025, obviously, down 22% over, and this is based on close, so obviously opened lower at one point. This is the Nasdaq, but that was the lowest close. It was down 22% over 110 days. So I mean, and there is about a month's difference between these, in terms of timing. So it could be public holidays difference, to be honest.
That's true.
So then, and something that really annoys me on Twitter is blokes that like get a chart and then just choose their own adventure with their line. So I'm going to be one of those idiots who does that. But it's merely to show what if it does play out the same as 2022. Mm-hmm. That's what it would look like. Yeah. So as chief graphic designer here at MPC, that took me hours to put that blue line in and get it to scale. But and
the key is we bought LNAS, so that's a long Nasdaq ETF. So every 1% that the Nasdaq goes up, that LNAS goes up 2 to 2.5%.
And obviously in reverse as well. If we get it wrong, it's just leverage. But basically, what I was trying to avoid, and the big mistake I made in 2022 was I got this move right, got stubborn and thought it was going to keep going down, and then FOMO'd here and nearly ruined my whole. Well, not my whole year, my client's whole year. Thankfully, I've convinced people not to sell there. We sold in October and then bought the buy. Got lucky, basically. But that really stuck with me. And, so we're effectively sort of buying somewhere equivalent to here. And it was more about get something on. We're only expecting maybe another 10%. That's why we've gone with the leverage because, you might get 25% out, a little bit of capital efficiency as well. Yeah, because it's just a little short-term play, for looking for a short-term win. Mm-hmm. Around that 20,000, possibly in the Nasdaq to get back to, and then sometime in the next month. But where it was interesting was those average days till the low lined up almost within a week or two of that low there as well. So it is on track.
What's that phrase? History doesn't repeat.
Well, but it sometimes rhymes. Yeah. So, and look, there are differences, but there are also freakish. This is a bit more orderly, to be honest. That's probably pre-Trump, post-Trump. But and this was just more on rising bond yields and the inflation thing, whereas this was a bit more erratic. So.
Yeah, so just on that, I do remember trading that, and one of the easier signals was in the ETF. So there was HYG and Liquid. They're both corporate bond and anyway they're
credit spreads.
Yeah, bond ETFs in the US, and whenever they rolled over, they would roll over before the equities would, and I was like, oh, here we go. This is actually a good time to get short equities. Problem is now is that for some reason those ETFs aren't giving away the same signals here. So I think obviously I would have to maybe look at the 10-30 spread because I think all of the actions in the long end now. So
this was
versus the corporate. This was
all to do with bonds. Yeah, because we basically
I think everything's always got to do with.
Well,
bonds.
no, but the reason I was selling out of tech here was the 2-year went through 1% for the first time in like a decade.
Yeah.
And that was always going to come in, and that was where basically junk bonds were yielding the same as government bonds because everything was zero. And and then everyone just went, "Oh, that's right. You're riskier. You probably should pay more."
That's right. And I don't want to dig up old ones, but it just showed that because that just shows your credit background. You were adamant that Nasdaq was going to roll over as well because they were pretty much long-term kind of carry trades.
Yeah,
but it just showed like when you have so much cash on your balance sheet, didn't quite matter.
Yeah. No, so look, it said, and the lesson was don't make this mistake again. So got aggressive in buying. Trump really tipped it over the line, watching him put his tail between his legs as well. But but it was more about probably stopping myself from buying buying too high. But we'll be definitely, and now when you're getting that groove with the market, you can kind of, now we're almost on the sell side again, waiting for it. And if we've got to stop out below the lows, we're giving away 5% tops.
Yep.
But we're looking for 15 upside. So it's always a decent metric. 3-to-1, profit to loss ratios is pretty good. So, and look, and if it does play out like that, we're the luckiest people in the world. Like I'm just saying, it's a rough guide of how it's happened in history. And I haven't just made this up conveniently. Look, I've been saying this since December. So it just so happens that, statistics are a wonderful thing. You can pretty much find the ones that suit your argument all the time. Just ask an economist.
Exactly. Anyway, that's Trade of the Week. So, for people that want to get this kind of information ahead of these podcasts, just subscribe to our services. Yeah,
absolutely. Just go to the website. You get a text message, email to your inbox when the recommendations go through, etc. So, because they've actually been timely recently, has been pretty good. Like
exactly,
our Phil's in Macquarie, Goodman's, that and buying in gear that morning, which was like 24% win in 3.5 days, basically.
I think it was like 2.5.
Yeah, it was 2.5 or something. But so this is the time you actually need us. You probably didn't. Go. So until you want to go back to ETFs because of all the passive flow, that's probably not a bad time for it. So, and then we've got we're having a little problem with the slides here, but there we go. Fear and greed. So we're back to 27.
So it was down to 14. I remember it was down to 7 maybe 2 weeks ago.
Yeah. So I don't think we'd ever seen it at 7.
Yeah. So we've
made jokes about it going through the floor,
exactly. So we're at normal fear levels now. So what's your prediction for next week, Mister? I'm on the hot streak.
It just means I'm closer to getting it wrong. I would have thought. I'm 6 from the last 6, and I missed a week. But you did put in what I was going to say anyway. I think I'm going to be bullish the next. I'm bullish this week, next week, and the week after, and then I'm getting the bear suit back out. Instead the dry cleaners. Because I think this thing's going to get, once those economic numbers start to weaken, and people don't see any trade deals done, they're already winding it out. Besant's apparently said something in today's session. It'll take 2 to 3 years to get a trade deal done with China. So never has there been, from the people making the policy, so much shifting in 36 hours.
Well, the plan is to have no plan.
The plan is
Or just on that, so I'm following the coattails of Mr. Gardner here. I am bullish for next week as well. I just see all those lovely Mag 7 earnings that, they're going to beat by a penny, I think. And the market wants to head on higher.
Don't get me wrong. I want us back to 50% plus cash at some stage in the next, probably in about 4 to 6 weeks potentially. I mean, I reserve the right to change my mind. Not like Trump changed my mind, as in just normal person. But look, I think one thing we've really realised in the last few weeks particularly, we've gone and started looking elsewhere, at Asian tech and European defence and things like that. The world's cheap. Sitting here going, everyone's blowharding about how, this is a once-in-a-generation buy opportunity in Amazon. And then you look at, Mercado Libre or Baidu or whatever, and then you go, well, they're way cheap, and they've got a massively growing market as well. So,
there's a growing world out there. I mean, I still think Asia Asia is where I would like to be. I mean, like, we often see, because our media is more US centric. You know what I mean? Like we get fed what the US feeds us. But the fact that China's just like sat back and chilled, and people haven't had to think about that. Yeah, China's quite well ahead, and I remember the DeepSeek moment. So for me, it was I had already seen that China is ahead in manufacturing. That's undoubted. But when they came out and actually said, "Hey, we can do software as well," I'm just like, "Oh, the game has changed."
When Huawei released the H100 chip, apparently it's 5 times the amount of energy that they use. But what do the Chinese care? Like they're not doing emissions targeting, are they? So they don't really care. But and that, by the way, those facts were from Kai. So don't worry about me quoting facts on. And then I think Baidu, which is like the Meta of China, released their first major AI agent as well. So, they're going pretty well. So
yeah, exactly right. So, and they've locked up all the supply chains. They've locked up all the resources. That you can't just suddenly. That's the thing with US is that you can bring manufacturing back to the States. But it's not an overnight process. It's not a flick a switch and
maybe that's Elon's plan. He's going to sell like 20 million Optimus robots because no Americans want those jobs. So maybe that's bring manufacturing back to the US for a bunch of robots to let's make Elon richer again. But yeah, it should be. I mean, obviously. Lest we forget for tomorrow.
Yes, Anzac Day. So
tip of the hat to the Anzacs and pay your respects tomorrow. Obviously, markets will be open globally, but just obviously not in Australia. So yeah, well, I guess we'll. I don't think we've got anything else left to say, do we?
That's it. Let's wrap it up.
Yeah, no worries. Well,
and thanks for listening.
Thanks for listening. See you next week.
When markets lurched wildly in April, our investment committee stepped in. We analysed AI valuations, studied gold surge, and executed strategic buys during dips. This wasn't theoretical. These insights protected our clients' portfolios when it mattered most. Watch our full analysis and prepare for what's next. Your financial future deserves expert guidance. Access the complete report now.